A few days ago, I made a video talking about the potential for a major pump in the last quarter of this year, as that is something a lot of people have been predicting and expecting. That video focused primarily on Bitcoin and Ethereum, but I know a lot of you are interested in and invested in altcoins as well. So today I will be going over how altcoins have performed during the fourth quarter of previous major bull runs in relation to Bitcoin and Ethereum. It is actually a bit of a common misconception that when the time for a major pump comes, everything goes up at the same time. However, this has not been the case in the past, and in this video I will be explaining how the timing of pumps by Bitcoin, Ethereum and altcoins generally has worked during previous cycles, as well as some signs to watch out for that can help you see when these shifts are coming, and some tools to help you in your own analysis of where we are in the overall crypto cycle. Before I get started, make sure to subscribe and activate the bell icon so you do not miss out on more videos like this in the future, as well as everything else I post here on the channel. So let's start off with a look at the general timeline of quarter 4 of 2017, which is of course when that bull run went through its last major pumps and had a blow off top. This is the Bitcoin chart from then, and as you can see, from mid-September until the peak here, there was only one red weekly candle at the beginning of November. However, that one red candle was a 30% correction. The next week's gains completely erased that correction, and after that it was all green weekly candles until the top for Bitcoin. As you can tell from these wicks though, there was a lot of volatility during this uptrend, which is something we will almost certainly see again if this type of pump is to occur. The next thing I want to show you all is the Bitcoin dominance chart during this time period. If you did not know, Bitcoin dominance is the percent of the total crypto market cap that is made up by Bitcoin. Some people also use it as a kind of estimate at how much Bitcoin's price movement affects the crypto markets. Bitcoin dominance goes up when Bitcoin outperforms the rest of the crypto markets and goes down when they outperform Bitcoin as a whole. In other words, if altcoins outperforms Bitcoin, then the Bitcoin dominance on this chart is going down. And as we can see, since the start of 2017, Bitcoin dominance had been trending downwards until it flattened out from around July through early October. It then began trending upwards until that one red candle in early November, which is what caused this crash in dominance here. After Bitcoin recovered from that, dominance once again trended upwards until the week before Bitcoin topped out. This is important to note because people who were paying attention to dominance could have used it as a potential indicator that it was time to perhaps take some Bitcoin profits and rotate that into altcoins. If we flip back to the Bitcoin chart, we can see again that the week beginning on December 11th was green for Bitcoin, but significantly red for Bitcoin dominance. This means that during that week, altcoins outperformed Bitcoin significantly, even while it was putting in that big green candle. To be clear here, I am not at all saying that Bitcoin dominance is the perfect symbol and you should base your decisions off of it, but it is definitely a useful tool to add into your analysis. Next up, I want to take a look at the Ethereum to USD chart as well as the Ethereum to Bitcoin chart. First up, we have the Ethereum to USD chart. It looks pretty similar to the Bitcoin chart from this time period at a glance, but if we take a look and we look at it more closely, we will see that it was actually lagging behind Bitcoin by a bit, and that Ethereum actually began its last major pump the same week that Bitcoin topped out. The next week, there was some major volatility that ended up in a slightly red candle, but then Ethereum pumped more than 100% in the following 3 weeks until it peaked here. One common reason that people use to explain Ethereum's pump lagging behind Bitcoin's is rotation. Rotation meaning that people took profits from Bitcoin and moved that into Ethereum, causing it to pump. This would also help to explain why many other smaller altcoins pumped alongside Ethereum after Bitcoin had topped out and had their own peaks around the same time as Ethereum, with some occurring further into January. The reason I want to share the Ethereum to Bitcoin chart with y'all is because some traders and investors use it as a tool to help decide when to rotate from Bitcoin to Ethereum. You can do your own analysis on this chart the same as you would for a normal USD pair, but when you think that the chart is bullish, that means your analysis is telling you that Ethereum is going to outperform Bitcoin and therefore you are better off holding Ethereum. The price axis displays what fraction of a Bitcoin one Ethereum is worth. As we can see, from mid-June until early December, the week before Bitcoin peaked, the Ethereum to Bitcoin chart went down, meaning that Bitcoin was outperforming. However, if you had been paying attention to this chart and thought that it looked like a bottom had formed here, you may have decided it was time to rotate into Ethereum, which would have actually been a very good timing. There are a few more charts I want to show you all that I think could come in handy. First, I just want to note that you can chart pretty much any coin against any other coin on TradingView to do the type of analysis I just explained for Ethereum and Bitcoin to try to help you decide which coin will outperform the other. The second type of chart is the total crypto market cap. So the symbol total on TradingView will show you the total crypto market cap if you wish to see how the industry as a whole is performing. The symbol total 2 will show the total with Bitcoin excluded. This can be handy to see when Ethereum and altcoins are making major gains. Last is total 3, which excludes Bitcoin and Ethereum. If you are one of the people who thinks that Ethereum is kind of this cycle's Bitcoin, this could be interesting to take a look at. You could also chart your favorite alts against Ethereum to see if they look like they will outperform it. One final tool I want to share is the Altseason Index. I have used this several times in previous videos, but basically what it does is show how many of the top 50 altcoins have outperformed Bitcoin over a certain time period. Along with the total chart and charting against Bitcoin on TradingView, this can help you give a quick overview of how well altcoins are performing against Bitcoin. So while we are on the topic of altcoins, I have also partnered up with a couple of projects I think look very promising, and Gpool and Transient are two of them. So I have covered Gpool a couple of times previously, but if you missed out on those videos, it is a project that is trying to prevent pump and dumps, and it's a whale-proof launchpad where retail investors can become seed investors. The Gpool team saw all of the issues with current launchpad platforms such as tiny allocations, low quality projects being listed, and everything else wrong with them, and decided to create a platform that puts its community first and only allowed the highest quality of projects to launch through them while providing users with guaranteed allocations. Gpool's approach has already been proven to be a successful one through the launch of their own token and their first IDO for the Depot project. Since its launch, the Gpool token has already done a 5x, which not only shows that their pump and dump prevention is working, but also that people believe in the project and want to be involved. Transient is going to be the second project to have its IDO through Gpool, and the race will begin on October the 6th. Transient, also known as the Amazon of smart contracts, is a disruptive new project with the goal of giving non-coders the ability to create smart contracts. The Transient ecosystem has been developed from the ground up to facilitate and increase blockchain adoption across all industries and aspects of life. Transient is creating an intuitive web portal which removes the need to understand the complex programming languages used to create smart contracts, making it possible for anyone to get started creating them right away. Additionally, the core features of Transient have been created to be blockchain agnostic, meaning they can be expanded to work with any chain in the future. As you can see in this graphic on their site, the real-world use cases for smart contracts created through Transient are numerous and far-reaching. Until now, even if people could understand that smart contracts could be used to improve a business or industry, the vast majority of people lack the technical skills to implement them. Transient will bridge that gap and break down the barriers to mass adoption of crypto. So make sure to watch the launch of Transient. I believe they are going to get listed in the next couple of days. So since there was a lot of interest in my Gpool video a couple of weeks ago, I'm sure that a lot of you guys actually also got into the Transient IDO. I really do want Gpool to succeed and actually be able to be one of the go-to IDO platforms, given the nature of them not having massive whales, getting most of the allocation and then dumping on the followers. So I really do hope that they continue working, continue bringing good projects, and continue doing successful launches. So one more project I want to go over today is called Merriman. So Merriman is a project looking to help retail investors make the shift from centralized finance to decentralized finance, specifically investors from the Robinhood app. I'm sure a lot of you remember earlier in the year the whole disaster with trading being halted for certain stocks and everything else that went on that caused many retail investors to be negatively affected. To help make up for this and to help draw users to their platform, which is launching during this quarter, Merriman is offering an airdrop of 20% of their token supply to Robinhood users. The form for this airdrop is very simple and quick to fill out and can be found on the Merriman site, which will be linked below. Robinhood currently has around 31 million users, so there's a very large potential number of investors who could be convinced to give DeFi a try, especially if they receive some free tokens for doing so. Along with the airdrop, DeFi should also be an attractive option for Robinhood users because they are able to control their own funds as well as trade and invest 24/7 without worrying that someone will turn off the markets while they are in a position. Merriman is also developing a mobile app to make it as convenient as possible to use, as Robinhood's convenience is something that helped draw many users to it originally. The core feature of Merriman will be the DEX that is used to allow investors to trade between different tokens, and another 20% of the Merriman token supply is being reserved to offer as rewards to communities of the first 20 projects to have $20,000 or more of liquidity on the DEX. As we can see here on the roadmap, there's a lot planned not only for the rest of this year but throughout 2022 as well. One more thing that is a good sign for the project's future growth is that the raise for their token launch was only $300,000, so the project will be starting at a very low market cap, unlike some other projects that launched at highly inflated valuations and then immediately dumped. So lastly, as I'm sure many of you know, DEXs are some of the largest DeFi projects, so if Merriman can successfully bring in the large numbers of users they plan to, it is likely that the project could see a lot of good growth. If you want to learn more about the project or fill out on the airdrop form, there will be a link in the description. So a huge thank you to the supporters of the channel, these three projects, and I hope that I will see you in the next one.